Hello, it's Robert Miner with Dynamic Traders Group with a very special report for our Twitter and YouTube followers, as well as our members to our DT News section on dynamictraders.com. This report is a little bit different than what I usually do each week for these various followers, in that there's very minimal amount of technical analysis and trend analysis, reversal analysis, etc. in this report. The report today is a very abbreviated version of a 40-minute report, special report I did for our current subscribers on the stock index trends and the time and price targets for the probable bear trend, what confirms it, what invalidates it. It was really a detailed report, very logical, and I know that if you become a subscriber at least, you'll follow it, and it will really, really help you in the weeks and months ahead. This is an abbreviated version. I'm going to give you the conclusions to that report, so that should be helpful to begin with. And then I got a few minutes of commentary on how anybody that's listening to this is going to be able to identify the probable conditions for the end of the current bear trend. Hint, it's not over. In fact, it's just beginning. But how you'll be able to identify that without being a technician, without being a chartist, that sort of thing. So it's going to be really, really helpful information for you in the weeks and the months ahead. So before I get started without that information, is for the next 2 days, just until Monday, this coming Monday, March 23rd, we're offering a 1-month trial to any one of our DT reports for just $29 for a 1-month trial. And boy, that's a heck of a deal. You will instantly, if you subscribe, you will instantly have access for the complete Big Picture Stock Indexes report. It's a 12-page written report plus about a 35 or 40-minute video update with a lot of really good information. Boy, that's worth the $29 alone. But plus, you'll get all of our reports, all of our daily updates, all of our trade tutorial videos, everything a full subscription subscriber receives over the next month. So, and this is a really critical time. You're really going to want to know what's going on the next month, because it's going to set the tone for the next 8 to 18 months, as you'll see if you subscribe and get our full report. So this is the time to spend $29 and check this out. And I think if you get that trial, you're going to find how valuable the DT reports are week after week and month after month, and you'll probably stay with us for some time. We have a lot of subscribers that have been subscribers for 15 and 20 years because not only of the analysis, trade recommendations, trade strategies that we give them, but the education they receive week in and week out to trade whatever market in any time frame that they're interested in trading. So this is a pretty cheap way to check us out. So check it out at dynamictrader.com/DT space report. So if you go to dynamictraders.com, you can just hit the DT reports tab. I got it all set up for a trial. You take our trial, you'll immediately have access to all this great stuff. So that said, let's get started. Well, let me give you the conclusions of what a very extensive description of the technical position of the market and the reasons, the rationale, and why it's going to reach these extremes or the limits that I'm going to show you right here. And I'm not going to show you the charts and go through the details. You'll only be able to see that if you do subscribe, but this information will be extremely valuable to you. So the S&P forecast. Last week's close below the December 2018 low is a major pattern reversal signal that we are in the initial stages of a bear trend. It's really significant because it's the first time we've had this signal since the March 2009 low, and it clearly signals that the bull trend from the March 2009 low into the February high is complete, and we'll have a bear trend or major correction that will correct that 11-year bull trend in the months ahead. So it's a really important signal that occurred. Number two, the bear trend should not be complete prior to November 2020 and will probably continue to July 2021 or longer. I'm always, my first focus is always to identify what's the minimum probable target in time and price for this trend, for a trend or a counter trend. And there's a wealth of evidence from different perspectives that the bear trend that began last month in February should continue at least to November 2020 and probably beyond. So what that allows us to do is between now and November is we shouldn't be too anxious to identify the end of a bear trend or a major low. That any lows that occur between now and November more than likely will be temporary. Any rallies will more than likely be temporary, and they'll be followed by a continuation of a bear trend to test or exceed whatever lows have been made up to that period of time. Really important information. And as we get near the end of the year, we'll be able to qualify from the structure of the market and the activity of the market between now and the next few months, whether that November is a good target or it's going to go to the more probable target, which is well into July of next year. So it's quite significant. The SPX, that's the cash S&P, should reach at least 2030 and probably 1810 or lower. So it should reach at least 2030. Until the S&P has reached about 2030 is more than likely we haven't finished a corrective decline or a bear trend off of the February high. Now 2030 is about 400 points or about another 20% below where the market closed last week. And it would represent a 50% retracement of the March 2009 low into the February 2020 high. Now, that's just the minimum probable target. And there's some other targets that are based on other approaches than simple retracements that strongly indicate again, that would be the minimum, and the probable is significantly below that, as low as under 1810. So that's quite a ways to go. Now, that doesn't mean we're going to just immediately continue to decline another 20%. We could have, and probably will have, some very substantial advances, multi-week advances before we continue lower. And of course, in our regular reports, that's what we identify as these weekly trends. And I can just say that we're very close to a probable initial low, a weekly low in the stock indexes. And when that's made and we begin to rally, we'll probably rally, have a corrective advance that'll last a few weeks, and it's going to get people very excited and thinking that the bottom's in. Well, that's what we call a wave B corrective rally. And when it's complete, it should be followed by a continuation of the bear trend. Usually it would be followed to a new low, and again, reaching 2030 and potentially much lower. So those two pieces of information is that we've made a very well-defined, very high probability pattern reversal signal that we're in the early stages of a bear trend or a correction of larger degree than any since the 2009 low, and that the current bear trend should not be complete prior to November 2020 and should reach at least 2030, about 400 points below where it is now. So at a minimum, we should have quite a bit to go in time and price on the downside. And that's what our full report goes through, all the technical reasons for that in a very logical manner, so you understand completely what we're looking at, and you understand from a number of different perspectives why these are minimums and what we look for, as well as what we're looking for in the weeks ahead to confirm or invalidate those minimum projections on the downside. Well, now what I'm going to do is give you an edited version of some comments that I made They're not technical comments, but it's a bit about bear trends, panic cycles, and how you can identify if we're at or near a very significant low and the end of this bear trend in this correction without any technical knowledge whatsoever. And it's really simple, really straightforward, and I think you'll understand it completely. So this is an edited version of about a 15-minute commentary. This is about 6 or 7 or 8 minutes, something like that I've edited down to. And I know it's going to be worth your time, so hang in there another few minutes. This is information that I think you can really bank on in the months ahead. So now I have some comments on some bear markets, panics, and more. And to answer these questions, what's to come, why, how will we know when it's over? And unlike many financial bear markets and panics, is we know exactly the cause of this bear market, and it's the pandemic that's spreading all over the world and getting worse and worse day by day, week by week. And we know that it's going to get worse before it gets better. We know this because every medical authority is telling us is that it's going to spread, it's going to continue. It's just a matter of how bad is it going to get. But it's going to be quite some time before it actually gets better. So if we know this pandemic is going to get worse before it gets better, then we know that the economy and the financial situation globally is going to get worse before it gets better. I mean, we know that. There's no question. They're directly linked. And in the past, there's been various reasons for bear markets and panics, and a lot of times those reasons don't become evident until long after the trend is over or it's been going on for some time. And frequently we've been able to throw money at it to solve the problem. Well, we can't throw more money at this to solve the economic problem because it's not caused by economic extremes or economic problems. It's caused by this health problem. So the economy will continue to suffer as long as the pandemic continues, and the bear trend will not be over. The economy and the economic restrictions caused by the pandemic are lifted. It's that simple, brain dead simple. And I think you'll all agree with me and understand what I'm saying. At least I hope you will. And by the way, if you don't, feel free to send me an email and straighten me out. So the second thing that we want to look for is the bear trend should not be complete and then, until there has been panic liquidation of stock market positions. As long as hope remains, the bear trend should not be complete. Most people invest in the final stages of a bull trend after it's been long underway, and they're the first to be in losing positions in just the initial stages of a bear trend. And most people then exit during the final stages of a bear trend when the pain of unrealized losses overcomes the hope for a return. And this is a warning, the bear trend is in the final stages. So we'll know that we're at least in the final stages of a bear trend when there is substantial liquidation. And that's why usually in the end of a bear trend, you see an acceleration of the decline. It's the point where the pain gets too much to hold on to the unrealized losses, and the quote unquote kind of amateurs start liquidating their positions at significant losses. And that's how bear trends begin to end, and they don't begin to end until that situation arises. So a little summary here and what you should look for in the months ahead. And keep in mind, these are minimum conditions before a bear trend is likely to end. So it doesn't mean that this is the end of a bear trend. It means it ain't going to happen and not going to bottom off until these things happen. And a bottom will not be near until we have solid data that the cases and deaths from the pandemic are consistently declining day after day and week after week. This bear trend is not going to end until this pandemic gets turned around and starts improving consistently and dramatically. And a bottom will not be near until the amateur traders and investors have thrown in the towel, taken their losses, and vow to never invest again. And that will probably be manifested in an acceleration of the decline to new lows, a faster rate of decline. That'll be the final liquidation. Until that happens, more than likely, we're not near a bottom or we're not at a bottom. We need these conditions to occur first before we can even prepare for a low. Well, there was much more to our special report for our subscribers on the technical position of the stock indexes as well as other types of signs there will be that will manifest before we complete a bear trend. So I hope you found this information useful. Well, if you didn't, there's something wrong with you. So I also hope you'll keep up with us, particularly over this next month, and take a 1-month trial for just $29. And that 1-month trial, that's only available through Monday, March 23rd. So only for the next couple of days. And the sooner you sign up, is the sooner you have access to the full big picture stock market report and video, as well as the regular report and video update that was just released on Saturday the 21st, which I think you'll find interesting because several markets are probably within days of making some significant reversals, very tradable reversals. So I hope you'll join us, and you'll let me to be service to you for a number of months, if not a number of years, as I have been for the past 35 years. I've been through a few of these bull and bear markets in the past 35 years, and I hope to share that experience and information with you in the weeks and months to come. Take care.